Hello, welcome everyone. Thank you for joining us for today's webinar on stewardship in Asia. Stewardship across the region has evolved rapidly, but it's also facing a moment of reflection. And over the past years, shifting market dynamics, regulatory developments, and growing scrutiny around ESG have raised an important question. Are we seeing a retreat, a reset, or a necessary recalibration of stewardship? To explore this, we, from Stewardship Professionals, we have brought together leading experts from across Hong Kong, India, South Korea, and Singapore. And together, they will share insights on what has fundamentally changed, where stewardship may be falling short, what holding the line, raising the bar could mean in practice. But we will also look ahead and ask, how will this moment be judged 5 years from now? As a step back, a correction, the beginning of a more disciplined and credible area of stewardship? Before we move into the panel discussion, I'm pleased to hand over to my colleague Alexander, the CEO of Stewardship Professionals, who will introduce StePs. StePs was founded to promote internationally recognized standards of knowledge, competence, and ethical practice, and also strengthening the integrity and impact of the stewardship profession. If you have any questions during the webinar, please put them in the chat and we will pick them up later at the end of the panel discussion. Alexander, the screen is yours.
Thanks a lot, Catherine. I was just tempted to say good morning, but for most of you, it's good afternoon. I was just about to put on a proper shirt, but then I thought, well, maybe what I already have wearing should be fine, because I just get up a little bit and then you can see my Japanese flag. And then I thought, for an Asian webinar, this is just about the right dress. So I left my rugby shirt on. Yeah, welcome to this first webinar on the StePs series. Altogether we have 3 this week. The first one now is for Asia, the second one will be for Europe, and the third one for the Americas, basically to cover all time zones. So I think we already have some European guests this morning, probably because they are interested in the Asian markets. How is stewardship developing in Asia? So before entering into the panel discussion, I brought a couple of slides with me. Very brief, don't worry, just 5 slides or 4. This is, by the way, the City Library of Stuttgart, so that's not an AI picture. But we thought that it's a very good picture because it includes the staircases, symbol for steps, a library, the place of knowledge. And that's why we chose this picture as more or less a logo for Stewardship Professionals. What is Stewardship Professionals? We are a non-profit organization based in Germany, but also in the US. In the US, we are a foundation. We are dedicated to the advancement of the profession of stewardship. 15 years ago, there was only a handful in Germany, or 20 years ago, there were not that many. But over the last 15, 20 years, this stewardship developed, so it became a profession nowadays. A couple of years ago, we therefore drafted a manifesto and published it, describing the development of stewardship in becoming a profession. StePs, we claim that we are the home for stewardship professionals. We would like to provide them a platform, a basis. We help the professionals to develop their skills. We offer a blended learning platform. We also provide information on stewardship, governance, and engagement-related issues. We provide trainings for institutional investors, for associations. We do that in-house, we do that online, we do it in webinars. We're fairly proud of our international coverage. We have a vast number of international instructors. So coming from Brazil to Japan, from the US to, the course is not ready yet, but we're planning to do that, Australia. So covering really most of the key markets worldwide. And we see ourselves as complementary to other existing organizations and institutions. So we do not want to compete with them. We see ourselves complementary. I indicated that we one of the core services we provide is the Certified Stewardship Professional Program. And with this, we try to provide a comprehensive overview of the profession of stewardship. We would like to help the experts to develop an expertise, and in doing so, help to foster their professional career and in overall promote good stewardship and ESG. This program is governed by the Content Oversight Committee. So that's a committee within StePs, which is responsible for the quality of the course of the program and the content. They are looking at the curriculum and ensure the completeness of all modules. StePs is not only for institutional investors. We do not aim to serve their needs. We also offer the services to auditors, academics, issuers. We have at issuers doing the CSP, just like representatives from NGOs. We also see ourselves as service providers to proxy advisors and other intermediaries. So we would really go beyond the mere stewardship profession within the asset manager. We'd also see the need of a stewardship expertise beyond this area. We have also developed an exam. So to get the CSP, you need to pass the exam. It's a 2-hour case study plus multiple choice test. This Friday, we have the 4th exam. So you'll be curious on how this will go. The CSP syllabus is divided into 5 pillars. We thought that this is the best approach. The first pillar is about the stewardship fundamentals. So here the students will learn about the complete background. What is stewardship? How is a board structured? Why is remuneration important? How to read and understand the balance sheet? So really the fundamentals. Then in the second pillar, we take the hands-on approach. We have a look at the skills, the tool set, the complete stewardship process, meaning proxy voting, engagement, the escalation process, exit. In the third pillar, we are going to have a look at the policies and the E&S aspects. In the fourth pillar, we look at the outcome, so on reporting and other issues like greenwashing, for instance. We look at transparency. And while the first 4 pillars are very, let's say, unique across all markets worldwide, the 5th pillar is here for the specific markets worldwide. So, for instance, where I'm sitting here in Germany we have market specifics, like we have various forms of incorporation. So we do not only have the stock corporation, we also have the Societas Europea. We have a 2-tier board system, which is not very common across the markets. We have employee representatives on the board. So there are some country specifics, and we like to capture that in the fifth pillar. So last slide before I hand over to Nana. Our learning platform, we've developed that over the last 3 years. It's a complete online program. It's there to help the students to prepare for the exam. It's part of the CSP program. It's basically state of the art. We're happy to provide you some test access so that you can have a look. At the bottom, there are some of the instructors we have. Some of them you will recognize in this call, like Wujan and Nana. And with that, I would like to hand over to Nana.
Great, thank you, Alexandra, for setting up the stage, and very happy to be here today. So my name is Nali. I'm the head of sustainability and stewardship of APAC for impact asset management. I'm very happy today to be here. As Alexandra said, we have quite a few distinguished panelists here with us. So first of all, I would like to introduce them. So first is Professor Wu Chan Kim. He's a professor of finance for the Korea University. I've known him for a long time, and he's a very influential voice for the governance reforms in Korea. Also knows the active ownership and the shareholder activism that is very active recently in Korea's market. So yeah, very happy to have her. And also we have Ms. Bing Lin. She's the head of digital strategy and communication at Stewardship Asia Center. Stewardship Asia Center is a Singapore-based nonprofit supported by the Temasek Trust. And it's also the secretariat for the Singapore Stewardship Principles for Responsible Investment, and also supported by the Monetary Authority of Singapore and Singapore Exchange. The center works with companies, investors, and policymakers to advance stewardship leadership in practice. And last, we also have Hatao, also a long-term friend of mine, and she's the COO and president of IAS, Institutional Investors Advisory Services for India. And she is very knowledgeable and very well recognized in the proxy advisory services and also governance-related matters, especially for the Indian market. So very happy to have them all. And before we start, I just want to mention that we have a relatively smaller group, I think, here today. So if you have any questions or anything, just feel free to drop in the chat. And we are very happy to make this more lively for the discussion. So my first question will be to all of you, but I think I will start with Professor Kim. So over the past few years, we have seen that stewardship has been facing quite a few challenges in terms of political scrutiny, market volatility. On top of that, now we have all this geopolitical drama every day. And there is a growing debate, I think, about the role of sustainability, ESG, in the investment world. So do you see the current moment as a retract from the stewardship, a reset of the expectation or the opportunity to strengthen and to display the stewardship practice? And what challenges or changes have you observed in the past 3 years from your perspective?
Are you talking about Korea specifically, or are you talking about the worldwide phenomena?
Well, yeah, whatever you're happy to. If you feel more comfortable commenting just on Korea, yeah, feel free to.
So when it comes to Korea, I don't think there is a pullback in case of Korea. Actually, there has been more positive developments when it comes to stewardship activities. So I think something that I want to really mention is with the inauguration of our new president, Lee Jae-myung, last June, early June, the stewardship environment actually improved in many dimensions. You may know that we went through like 3 consecutive amendments of the commercial code, which equips minority outside shareholders. It will equip them to make it easier for them to, for their candidates to be placed on the board. So, for example, we made cumulative voting mandatory for large firms, which is going to give a much wider opportunity to place minority shareholder nominated directors on the board. And also in Korea, we have this something called the 3% rule. We restrict the voting rights of controlling shareholders when electing audit committee members. But we strengthened it so that those audit committee members, when they are elected as directors, at least two audit committee members will be, their election will be subject to this 3% rule. So it's going to be much easier for minority shareholders to place an audit committee member in the company. So that's a improvement. And not only the commercial code amendment, the stewardship code itself, the Korean stewardship code, which is not really functioning in Korea. We adopted the Korean version of the stewardship code following UK and Japan and so on, but it's not really working because anybody can be a signatory and they don't have to do anything. So we have like 200 plus signatories in Korea. And so we have, so this has been recognized, this problem, and the new government is trying to revise it so that now they would have to actually publicly release what they have done during the past year. So this is not finalized yet. We don't have the revised version yet, but with the revision, there's a growing consensus that we should make it mandatory to disclose what they have done. If they can do it, of course, there are some confidential engagements, they will not be able to disclose that one, but such activities that they would have to do so. And also, it will be evaluated by government agencies. I don't know which agency will be doing that, but that's being considered. And also, once you become a signatory, you're not only obligated to engage on governance issues, but also environmental issues and social issues and so on. So that's another development. And the other one, we finally the government released the roadmap for mandatory green gas emission disclosure. It's a very gradual schedule. The very first mandatory disclosure will happen in 2028. So it's a very gradual, slow one, but at least it's better than having nothing. So the companies, now the stewardship institution investors will have some hard numbers to work on when they engage against the company. So actually the stewardship environment has improved in Korea. But I do want to mention that for foreign institution investors, there has been some retreat. For example, one pension fund, which has been very active in the Korean market, they divested many of their shares to make their portfolio green. So that's good for their portfolio, but the problem is because their ownership is now so small, they don't have the enough shares to file a shareholder proposal. I mean, shareholder proposal is one very effective mechanism to engage against the company. It could be a good threat to induce the management to talk with you, but they can't do it. So that pension fund is now completely out of the scene when it comes to submitting shareholder proposal. And when it comes to other index funds, they have been aggressively voting against director election in companies where we have very low gender diversity. So they've been very active in voting against the directors of those companies. But my recent research paper shows that that has not really brought about any material changes. In Korea, the gender diversity, the fraction of female directors have increased, but my study shows that that was largely driven by the Capital Markets Act amendment. The new law required large firms to have at least one female director. That explains almost everything. Any engagement activities, voting disclosures by index funds or other pension funds did not really make material changes. So that is something that I wish there were more activities and more results there, but I have not seen that. So that's from me. Maybe I should let you move on to other speakers.
Yeah, great. So I think that you mentioned quite a few points that is resonate with our other two panelists, shareholder resolutions and the corporate view on this. So maybe next I will go to Bing Li. What's the perspective from your corporate world, and also how does that look in Singapore?
I just feel that there is two directions here. You know, on one hand, you have talked about the development of stewardship codes and practices. And on the other hand, we're talking about the implementation of ESG criteria and reporting. So I think in general, as I am based here in Singapore, I would talk roughly about Southeast Asia to the best of my knowledge. So we are, as Stewardship Asia Center, we are the secretariat for the Singapore Stewardship Principles for Responsible Investors. And it is voluntary. So the government approach is that it should be a trust-based framework, because it wants it to be not onerous. It wants it to be values-based. So in other words, that investors should want to do good without having to have mandatory requirements. Now, we recently conducted a research entitled Stewarding Value, Unlocking Market Potential Through Engagement. Now, this was supported by the MAS, and the whole aim of this particular report is to tell local companies that there is value in stewarding your company properly, because it adds to your corporate value. And we have some very interesting engagement with companies here. Overall, sad to say, about 80% of the listed companies, 80% of the investors feel that the companies here, listed companies in Singapore, the transparency can still be improved. So I think the government is very much invested in stewardship, and they want companies to really get on board this particular train. On the ESG front, I think there's a lot of requirements for reporting, Scope 1 and 2. Listed companies have to do it by, in fact, they started last year. The non-listed companies will have to start in FY 2027. So I think, so that's generally Singapore. In Malaysia, I know that they have revised their codes, stewardship framework codes in 2022. It's also based on a voluntary adoption basis rather than legal enforcement. I think the most interesting for us in recent months has been Indonesia, because of the market volatility in January this year. It tanked. And that's due to MSCI saying that, it's just not enough free float, transparency is not enough, and therefore we have actually, from our end, we have tried to engage some of the Indonesia government bodies that we know to kind of propose some awareness, or not so much awareness, but to also to share best practices that we've seen here. So I think while Indonesia has made progress in carbon markets and sustainability reporting, but the market volatility in January just exposed the gaps between ambition and execution. Over just briefly on the rest of the markets here in the Philippines, I think, again, I think across the board in Asia, Philippines, Thailand, Vietnam, the Philippines and Thailand particularly, we have seen improved sustainability reporting and ESG disclosure, but stewardship codes in the sense of engaging companies and, proxy voting and etc. I think that's more embedded in governance framework, and those governance framework, again, I think is largely voluntary, not mandatory. Yeah, and in Vietnam, as you can see, that the markets there are developing quite quickly, but awareness on stewardship is just starting, as is ESG awareness. So I think in conclusion, this part of the world, we see not so much a retreat, but I do see that there is definitely opportunity to strengthen, and disclosure frameworks have absolutely expanded despite the backlash in the US. But the stewardship has not kept pace uniformly with ESG adoption. That would be what I can conclude. Over back to you, Nana.
Great, thank you. Yeah, again, a lot thoughts. I think a lot of very valuable thoughts. How about you, Hada? How about from India?
Good afternoon, everyone, and Nanali, I must thank you for the very gracious introduction. India has codified a lot of it. So basically, stewardship emanates from the regulator, the stewardship principles. The regulators of the asset management industry have mandated a stewardship code for the entire industry. So insurance companies, pension funds, and mutual funds, alternate investment funds, all of them need to have their own stewardship code. As a function of the stewardship code, they have to vote on all shareholder resolutions. And India is a unique market in the sense that not only do they have to vote on shareholder resolutions, they have to publicly disclose how they have voted and also the rationale for voting. So it's sort of by asking asset management industry to disclose the rationale, it deters them from abstaining because they even have to explain the abstention. So therefore, you're seeing now a lot more of the capital getting voted, about 80 to 85% of the capital is getting voted upon. I think when India had brought in e-voting in 2014. So today, when capital is getting voted upon, it's basically counted by the weight of the shares and not the show of hands, which used to be the earlier premise. I think what has happened over the years is that stewardship in India evolved by simply voting on shareholder resolutions and compelling the industry to vote on shareholder resolutions to now becoming more broader construct of also engaging with companies and addressing issues. In India, stewardship engagement has increased significantly, also for a change in the market structure. So over a bit of time, if you looked at it over the last 10 years, right, the equity held by controlling shareholders of families has reduced a little bit, is now about 51%. But the equity held by institutional investors, the asset management industry has significantly increased about 35%. And the rest is retail shareholders. So when you look at an increasing institutionalization of the shareholding, and that too by the asset management industry, and new retail shareholders entering through the mutual fund route, the degree of responsibility for the entire industry to engage with companies and ensure more responsible behavior increases tremendously. And this is where the Indian market is at this point in time. So the degree of engagement between companies and investors has increased a lot. There is a lot more sensitivity that companies have to how proxy advisors vote on shareholder resolutions. And a lot of the ESG disclosure is also codified in the business responsibility and sustainability reporting structure. So India is one of the few markets which has tried to standardize the ESG disclosure. And this is the second year in which, actually, the second year will be the FY26, second year in which companies will be reporting on a certain set of parameters in a predefined format. And that not only includes the scope 1, scope 2, this sort of emission, but also includes water intensity, social aspects, pay parity, gender diversity in the workforce. So some of these elements are now getting codified into a codified disclosure in a specified format, which makes the data also comparable. And this has also become mandatory for a lot of the companies. So from my perspective, while there is this whole global conversation around ESG not being the flavor of the season, so to speak, I think India is on a very, very different planet. The conversations on governance are far more intense. The conversations on social are far more intense. I think the focus on climate should certainly improve, but the government of India has put out a net zero target by 2070, and it cannot do that without the support of corporate India. And therefore, over a period of time, while some companies have put out a net zero target, you will find more and more companies working towards it because this is something which the government will need the support of the private sector to do. So I think India continues to focus on the ESG piece. I think the fact that they've tried to provide more structured data creates more comparability, and I'm a big fan of the average competitiveness of the average Indian. And therefore, when the disclosure is commensurate and you can compare, you're likely to see a certain degree of improvement.
Great. sounds like the outlook in Asia is actually much more optimistic than we had thought, and also compares to some other places now. So move to my next question. That will be for you differently. I think first one I want to ask Bing Lin. So from your perspective as a stewardship leadership, how should companies respond as Hatao and mentioned that the sensitivity has risen, and also maybe the expectations from investors has also risen, as Professor Kim mentioned, around sustainability and stewardship. You're on mute. I think you're still on mute.
Yeah, apologies. Yeah. So I thanks for that, Nana. Maybe I first explained what steward leadership means. We actually define steward leadership as genuine desire and persistence to create a collective better future for stakeholders, society, future generations, and the environment. And therefore, it is a choice, and it's something that you decide that you wanted to do. It's not based on rules or regulation or compliance. And we believe that if you have to do something based on rules, regulations, and compliance, then there is a risk that you're box ticking. And I think that's not enough emphasis in this world about talking that you have to be genuinely wanting to be a steward, so that you are stewarding capital, resources, environment, making sure that all stakeholders benefit. In the steward leadership compass, we also there's 5 basic principles. It's the viewpoint on interdependence, that the world is so interdependent that you cannot do anything without affecting another person or another company. There's this aspect of long-term view. You take a long-term view on your sustained value and your longevity. Ownership mentality, that means you make a decision, make a proactive responsibility to create positive environmental and social impact. The idea also of creative resilience, that's the persistence to find innovative solution to disruptive challenges. And finally, in the world of AI, we have added a 5th value, which is ethical integrity. That means you apply ethical judgment beyond current laws and societal norms. So just to quickly answer your question, how steward leadership applies here, in the sense, I think in the Southeast Asia markets, capital markets, I think similarly in India, ownership is concentrated in stately entities or family controlled. So that's why the stewardship codes are largely voluntary as a result, right? And the other aspect of this part of the world is also, as is the rest of the world, technology is moving so fast, right? So rules and regulation are constantly playing catch up, right? So so we believe that formal frameworks are good, but alone are not enough to guide behavior. So I mean, in instances, I mean, in Singapore, I think there has been comments that the government is the controlling shareholder of many companies, and as is some rich families here. So institutional investors may not be disciplined to vote against it and tend to be more cautious in how they engage. But having said that, I think the government here in Singapore is also very committed to doing the right thing. So it's very, very committed to encourage transparency, credible engagement, and that's in part because it's a small country. It requires, it needs to build trust, right? It needs to build trust on a global basis to ensure that it is doing the right thing, and therefore people will continue to invest in Singapore. So for that aspect of it, Singapore is very, very committed towards making sure that there is investor trust, there's good access to capital, transparency, and etc. So in a sense, there's constructive influence through engagement, voting, and dialogue where visible. So I mean, I don't know whether I answer your question rightly or wrongly, but I think that in many instances, while there might be frameworks, there might be rules, and you might want it to be compliant, Stewardship in itself is also values-based discipline. And it depends on your intent, your consistency, and the way that you can build trust.
Great. And yeah, of course, trust is very important in this whole process for communications. And to Professor Kim, then from your governance reform perspective, and also from your academic perspective, what have you learned about the effectiveness of stewardship in improving governance in Korea? Sorry, just before that, Alexandra, do you have a question?
Thanks, Nana. Yeah, in fact, this is a fantastic overview of all the most of the Asian markets. So I quickly wanted to ask you if you maybe could quickly provide an overview of how things are in developing in mainland China and in Hong Kong. Do you think this might be possible?
Well, it's definitely possible. I'm actually just off a call with PRI. Basically, the message was we still have a long way to go for China, but I think for Hong Kong, we already have a principle of responsible investment, I think, issued in 2017. But again, just like Korea, like Professor Kim mentioned, it was almost never implemented. So I think how asset owners are thinking about this, I think it will be the most important part of this puzzle. And the reason why it works in like Singapore, like Japan, and some parts of India, etc., is because the government and the asset owners are actually very much on board, and they are very supportive. So we're waiting to see that kind of support in this region. That will be my short answer. Yeah, let's go back to Professor Kim. Thank you.
Okay, when it comes to the effectiveness of stewardship activity, I kind of already told you about foreign institution investors. Unfortunately, it has not been very effective. But when it comes to like local institution investors, there has been very positive changes. One is from local activist funds, and the other one is from National Pension Service. The local activist funds, their AUM is currently not very large, which is why they're not engaging against like Samsung Electronics, but they have been engaging against mid-size, mid-cap corporations, and there are lots of success stories. There are success stories, for example, from SM Entertainment, Namyang Dairies, KTNG, and more recently KCC. So their activities, engagement activities, on average, has been very positive. The other one is MPS. So MPS itself also adopted its own stewardship code. It's a signatory, but they have not been very active. I mean, they do proxy voting for sure. I mean, they disclose their proxy voting in advance of the shareholders meeting. They even write why they are opposing some management proposals and so on. But they have done it in a very quiet way. Okay, they do not want to be seen or be heard, right? As if they didn't want to. But this AGM is different, right? So we're having the proxy season right now. We're in the middle of the proxy season, and MPS, interestingly, they sent out a press release. This is very unusual, sending out a press release on how they are going to vote on certain kind of management proposals. They said that if there is a management proposal that is going to make the commercial code amendment ineffective, they're going to, in principle, vote against them. And I'm collecting the data right now, and they are consistently voting against those management proposals. And actually, it did make a difference. Some companies, their proposals has been voted down. I don't want to mention the name of the company, but what this company did was they tried to set a limit on the number of directors. What they have done is they changed the corporate charter so that the number of directors will be less than 9. They used to have like the upper ceiling of 16. They dropped down to 9. And the suspicion is that they want to prevent minority shareholders from nominating a director who'll be sitting on the board. So what you do is you make sure that the current incumbent directors are exactly 9 members. And their term, if their term has not ended, well, even if you have like cumulative voting or the 3% rule, it's no use because there is no seat available for those nominated director candidates. So this has been voted against by NPS, and it is actually having influence on the voting outcome as well. I mean, I think the reason why Asia is different is partly due to which government is currently in power. In case of Korea, we have a liberal party in power. As you probably know, some years ago, we have this martial law announced by our ex-president who was impeached. Now we have a liberal party, and this president is very reform-minded, and he's really committed to corporate governance reform and all that. And probably like 5 years from now, if you look back and try to evaluate what happened in 2026, we will say, oh, that was a year everyone in the Korean market trying to value up the Korean market. That's what I would say.
Great, thank you. Yeah, I mean, I remember last year when we were in Korea, we had this long debate about who's going to be the CEO of NPS, and that's going to drive the direction very differently. So we're happy for Mr. Kim's comeback. So it goes to Hatao from India and also from your proxy advisory perspective. How are the voting behavior and also engagement practices and strategies changing in your market?
I think a lot of development has happened over the last 5 years. Voting practices have improved. I think we are seeing investors becoming more vocal. Number of votes against has increased. And that's not necessarily because of the nature of the proposal. It's also the fact that investors are sharpening their voting guidelines and also getting a lot more vocal and getting a lot more affirmative, if I may use the word. We of course have a mix of domestic and foreign investors in the pool. Depending upon which day you look at, that balance changes. But right now, domestic investors way heavier than the foreign investors as far as the capital markets are concerned. And therefore, but notwithstanding, given that all of them follow a stewardship policy that they've crafted for themselves, we see voting outcomes to be significantly high and definitely much more. Companies are getting much more sensitive to it. I think one of the things I would want more to happen is, and while we do see shades of activism, one of the constraints in the Indian market as far as activism is concerned is a 10% shareholding threshold for any investor to propose a resolution at a shareholder meeting. This is a significantly high threshold. Most markets have a much lower threshold, and that is a significant limitation to investors becoming more proactive in trying to find resolutions. So even when cases where there's value destruction happening, for investors to get together and take an activist stand, we've seen examples of it in the past, but it's a much bigger hurdle than doing it with a lower threshold. So I think that's one constraint. The other constraint is the fact, it's not a constraint really, it's untested. So we've got the 2013 corporate law, the Companies Act 2013, brought in the ability to have a class action suit. And the rules got codified subsequently, so you can actually now do a class action suit. But it's not being tested in the market. There's one case which has gone to the courts, which will effectively define how class action suits will sort of work in India, or at least set the precedent. So it's early stages. But one of the big limitations of the class action suit actually working in India are two limitations. One, the judicial system is slow. It just is. And the other piece is that lawyers in India don't work on success-based remuneration. So essentially, you need to have deep pockets and a long sort of holding threshold for you to be able to take a company through an entire class action suit, which is, given the nature of the asset management industry, possibly a tall ask. Investors would much rather get out than litigate. But it hasn't stopped certain degree of, I mean, we've seen experiences of activism in terms of investors getting together, asking for the removal of the entire board, getting a new board in, bringing in a strategic investors. So there are success stories, but the only thing is that it takes a lot of willfulness for investors to really take that stance in India and get success. The system doesn't necessarily is not flexible enough to or create an environment where you are encouraged to undertake that kind of an action. So I think that's from my mind a certain degree of a limitation. It hasn't stopped investors from voting against proposals or even, like I said, looking at activism, trying to get things changed. We've had instances where companies have made announcements and investors have called them up and the stock price reacted, they've withdrawn their resolutions. All of that happens. But I think a more forceful legal stance to effect material change, I think that's difficult to do in India if you want to use the judicial system. If you want to do it by talking to people and engaging with people, it's a much easier ask than trying to go through the litigious system. So that's, to my mind, how I would look at India. But by and large, I think investors, the trajectory is positive, right? Voting outcomes show a very positive trajectory. We do see engagement working quite effectively in certain instances. It's when controlling shareholders have 75 or 75% shareholding, which is the maximum they can have. That's when I think their ability to listen to the market sort of diminishes. The other piece is, when you talk about in China, for example, state-owned enterprises having a large role in capital markets. In India too, I think state-owned enterprises would account for about 15 to 20%, some number in between of the total market capitalization. But state-owned enterprises tend to be the exception to every rule that the government creates. So they basically have even compliance-related issues, right? Board compositions don't meet regulatory requirements, and therefore nothing else does. The other piece, and it's not a mitigating factor, but the reality is that even for state-owned enterprises, the role of the board gets very limited, largely for the fact that the government itself appoints independent directors. The government does board evaluation. The government basically decides the strategy, and the government really decides everything for state-owned enterprise. The role of the board does get limited, but notwithstanding, they basically don't comply with the minimum board requirements. Disclosure levels on related party transactions are low. So this is an element that needs to be addressed for sure. And that's something that we've been talking about for several years, but it doesn't seem to change. I think to address also Billian's point of saying that, true stewardship is based on trust and it has to be something that you really want to do as far as intent is concerned, I tend to agree. You can't really dispute that. But in India, I think it's cultural. Unless you get the regulator to give you a kickstart, it doesn't really move in that direction. I'll give you an example. So I think a couple of years ago, the regulator brought in a resolution which says that you have to have at least one woman on every board. And you would think that given the family controlled nature of the market, you would have the wives, sisters, mothers, brother-in-law, sort of sister-in-laws kind of joining the board. That would be an immediate reaction, given that everybody really hesitated and the initial call of corporate India was there aren't enough competent women to join the board. I always find that amusing. But notwithstanding, when you finally looked at the data a year down the line, you found that 65 to 70% of the women who got onto these boards were independent directors and were extremely accomplished and competent. So while there was an opportunity to, actually get family members onto the board, corporate India decided differently. So like I said, it's a little bit cultural that you need the regulator to give you that kickstart and then, everybody gets their act together. So while I'm bullish on India, I think that's something which we certainly look at differently. But that's where we are.
Great. So let's move to Q&A. Any questions from anyone?
So far I haven't seen any questions in the chat. So
Yeah.
I would
come off like mic.
I would suggest that we then move forward to the forward-looking perspective then from your
Yeah,
questions,
sure.
maybe.
Yeah, so one last question from me is, looking at like ahead for the midterm, like 5 years from now, what do you think this period will be recognized, will be remembered? Is this a pullback? It's a necessary recalibration, or it's the beginning of a more disciplined model of investor stewardship? And as investors, how should we prioritize to make sure that stewardship continues to deliver real outcomes? In that sense, is really about value creation. I'll give you some more context if this is difficult, because one thing I have been thinking is sometimes as a active investor, sometimes in this region, what I'm been doing is beyond the company level. So there's some advocacy activities we have done, quite a lot actually, is related to policy, public policy. So some would say that this is actually like drifted from the core mandate of the investor stewardship, and it should be belong to public officials or policymakers rather than led to the financial market. So what do you think about that?
I think the primary responsibility should be on the shoulders of lawmakers. I think we are engaging, investors are engaging because there's a government failure. Because of this political deadlock, politicians are not doing their job. And because of that, we had no other result but to act on our own directly against the companies and so on. But if the government can work out, I mean, that's probably the best scenario. So yeah, but we don't see that much around the world. But recently in Korea, I did see one improvement. Well, there were a number of improvements on governance side, but on the labor side, we also passed a labor law that will now finally allow subcontractors to directly negotiate with the managers of the primary contractors. So it used to be only the employees working in the company that was allowed to negotiate their pay and so on with the management. Now the subcontracting companies, their employees can directly negotiate against the managers of the primary contractor. So that's a great improvement. And that's probably good for like workplace safety issues, because there are a lot of death tolls in Korea. And mostly they are employees working for the subcontracting companies. So I do see some good signs of government, the lawmakers working, but still we know that it is imperfect, which means that there is a job for us to do as well as investors. And maybe I'm using up too much time. So that's my initial response. Yes.
Yeah, thank you. Yeah, and definitely, I think that's also a very big issue in Japan, the different treatment between part-time and full-time staff. And I know the cabinet office has always also been very actively trying to solve this, but also a long way for the equal, I think, for equal treatment. Any observations from Hata or Bingling?
I think in Singapore, everyone kind of know that it is actually the government that drives quite a bit of the governance and the reporting and, stewardship front. I mean, we get a lot of support in that front if we're doing anything related to governance, transparency, the advocacy work that we as a nonprofit, in terms of education, in terms of just creating awareness. So I also think that, yeah, the government has to do its part, but then again, also there's aspect of the fact that the private individuals or even the organizations themselves has to be willing parties in some respect. Otherwise, you get a lot of box ticking in some respect or greenwashing in that regard. So that's my viewpoint. Yeah.
Thank you.
So let me take the contrarian view. I think in India, I think there's a lot of regulation. In my view, a lot of the regulation tends to is prescriptive largely because enforcement is weak. and then it tries to therefore make up for poor enforcement. And I think therefore that balance needs to be struck, where you have a more principle-based regulation, better enforcement, quicker decision making and outcomes, which I think changes the market substantially. On the other side, and I think that's a fix that really needs to happen for activism to increase substantially as far as the markets are concerned. But I think on the other side, we see investors do have a greater sense of their responsibility, both domestic and global. I think because the degree of engagement has gone up, and like I said, it's nature of the market. You get regulation to kickstart the process, and then it sort of takes a life of its own. And therefore, a lot of it is now getting fairly embedded into the ecosystem. Decisions are being made, which also include sort of investment decisions based on what is the quality of governance that companies actually have. So I think I would look at 5 years down the line, I would look at this period of actually, a significant change in the market dynamic. I'm hoping the class action suit that we get maybe a result in a year or two will change the dynamic even more, which sets a good precedent for the rest of the investors. And maybe that sets the path for a very different level of activism in the country. But I would say this has been the last 5 years have been a great period for India as far as the engagement, as far as investors are concerned. So even when you looked at the governance boards over the years, right, this is the fourth or the fifth generation of reforms, and all of them earlier all related to how companies would behave. This is the first reform that you are seeing which actually empowers investors. And that's the momentous piece for India. So I think going forward, I expect this to become much more serious and stewardship to become much more mainstream part of the investment activity.
Great. I think we have had a very active discussion and among different regions and different perspectives. Maybe I'll give the last 3 minutes back to Catherine about the future events and also closing this up. Thank you.
Yeah, thank you so much, Nana, for moderating this. And yeah, thank you for the participants. Thanks to the panelists for sharing the insights today. And yeah, we hope you enjoyed the discussion. We kindly invite you to join the webinars the Thursday this week for Europe and the Americas. As Alexander already mentioned, I just put the link in the chat so you can register right away. And we would be also delighted to have you joining the Stewardship community on LinkedIn. I put that link in the chat as well. And without further ado, I would say goodbye to you all and have a great rest of the day. See you soon. Bye.
Thanks very much.
Oh, there's one
very
question
much.
left.
Yeah. There's a hand up.
There's a hand up, right.
By accident?
No?
Okay. Okay. Yeah. Thank you very much.
Okay.
Thank
Thank you
you.
all.
Thank you.
Bye.
Bye.
Thank you. Bye.